Today we're going to talk about philanthropic funds. Keep in mind that fundraising or development, which are terms that you'll encounter here in a few minutes, are a very important part of nonprofit organization success. Philanthropic funds is fundraising, or the funds that support nonprofit organizations in a very large way. So if you're interested in working with a nonprofit organization at a professional level, I would encourage you to consider taking the fundraising course offered by University of Idaho and further your study in this area. You can't underestimate the importance of gifts to nonprofit organizations. Philanthropy is common around the world, but organized fundraising on a massive scale is still primarily an American phenomenon. In 2008, the largest source of philanthropic funds came from individuals, 35%, foundations at 13%, corporations at 5%, and bequests at 7%. Now, bequests we'll talk about later in the chapter, but those are what people will take into consideration in their will and in their estate planning to give to a nonprofit organization as a donation. The largest portion of philanthropic funds are given to religious organizations at 35%, and then education at 13%, human services at 9%. Giving to create foundations is about 11%. Gifts to the public and society benefit organizations at 8%, health at 7%, arts, environment, and the animals together at less than 5%. And we'll talk about this in a minute in the pie charts. Charitable or philanthropic giving is an important source of revenue. I cannot estimate that enough for a nonprofit organization, although relative importance varies among subsectors. So you know the subsectors of the nonprofits that we talked about. Health services have a very low reliance on donations or philanthropic giving. Educational and civic, social, fraternal organizations rely on this kind of funding on a medium way. Religious organizations and human services, however, have a very high reliance on gifts to nonprofit organizations or donations. Private giving can be used to address organizational priorities rather than support specific programs or services. So if somebody wants to give a donation to a nonprofit organization, they can give that to address just the organization's priorities, like core operations or capacity building, building new facilities, new initiatives that lack paying customers or grants. So private giving can be used for those rather than supporting specific programs or services themselves. So there's different kinds of revenues that support different parts of the organization, whether it be the day-to-day operations or the programs, and that's what we're talking about in that part of this particular slide. So as I had mentioned, there's a pie chart here that illustrates the sources of gifts. This is from 2008, where private individuals gave 75% of the sources or the revenues of donations to the nonprofit organization. So individuals, people like you and me, gave 75%. Foundations, which we talked about the difference between a charitable nonprofit and a foundation. Now, foundations gave about 13% to the charitable nonprofits, and that's a distinction that you need to keep in mind, and we'll talk about that again here in a minute. So foundations gave charitable nonprofits about 13% of their sources of gifts. Corporations contributed about 5%, and bequests, the estate planning and through wills, about 7%. So that gives you an idea of where the money comes from to support the charitable nonprofit organizations. This pie chart illustrates the recipients of the gifts. So we just talked about where the sources of the gifts were. Now, who receives the philanthropic giving? Well, 35% go to religious organizations, and the rest are subsectors that receive smaller amounts. So the important part of this slide is for you to understand that religious organizations receive the majority of the gifts. In this chapter about philanthropic giving, we're going to be talking about various definitions and distinctions. It is a broad overview, but there is a lot to still learn in this chapter. So I'm going to emphasize the difference between charity and philanthropy. Now, charity is giving to meet the immediate human needs. Philanthropy, on the other hand, is giving to develop institutions that serve human needs or enhance human development over the long run. So keep in mind there is a distinction and differentiation between charity and philanthropy. Charity is giving to meet immediate human needs, immediate needs. Philanthropy is given to develop institutions that serve the human needs or enhance human development over the long run. So philanthropists are giving to develop over the long run. Charity, when you're giving to charity, you're giving to meet an immediate human need. Public charities, this is a review. Public charities and private foundations, and I've put this on this slide for you to remember and to review the distinction between public charities and private foundations. Public charities are the organizations people usually think of when they hear the word charity. These nonprofits' missions range from helping the poor to easing community tensions to advancing religion, education, or science. Many public charities rely on contributions from the general public. Donations to public charities are tax deductible. So, for example, if you're going to give to the Red Cross, you'd be giving to a charity, and then you can take a deduction off your taxes for that charitable contribution. Private foundations are charitable organizations that do not qualify as public charities. They're typically established with the funds from a single source or specific sources such as a family or corporate money. Private foundations usually invest their principal funding, then distribute the income from investments for charitable purposes. Many have endowments. These are Robert Woods Johnson Foundation, Kellogg Foundation, Bill and Melinda Gates Foundations. You've heard of these a lot, and they are private foundations, and they usually invest their principal funding. Then they distribute the income from the investments, so the monies that they've earned from those investments, for charitable purposes. So that was the income back to the sources of funding back to the charitable nonprofit organizations that we just mentioned. I believe it was 11%. Now, many of these private foundations have endowments. There are two types of private foundations, two main types of private foundations, and you'll want to know these. Private non-operating foundation grants money to other charitable organizations. Private operating foundations, however, distribute funds to its own programs internally that exist for charitable purposes. So know the difference between a private non-operating foundation as well as a private operating foundation and the difference between the two. In this slide, we're going to talk about more definitions and distinctions in the chapter. Motivation terms that you'll need to know. Altruism is when individuals are driven by their nature to help others. Most people understand altruism, and that's when individuals want to help others. It's considered altruistic in nature. Gifts in kind. Gifts in kind are non-cash gifts. Oftentimes they're products, and often they're from corporations. So what you need to know about gifts in kind is that they're non-cash gifts. Bequests are gifts made by individuals through their wills or other estate planning vehicles. We'll talk about those again, but to keep in mind that bequests are gifts made by individuals through wills or other estate planning vehicles. Let's talk about some fundraising terms. Fundraising is the activity or action with the goal of charitable donations. So it's an action or activity that the nonprofit organizations undertake to elicit charitable donations or money, gifts of money. Sometimes you will see or receive letters that enclose address labels, bookmarkers, and those are soliciting contributions. There may be activities such as golf tournaments or auctions, which are fundraising activities. So they're all designed to elicit charitable donations. Grant writing is the process of writing a proposal to submit to a foundation with the hopes of receiving funding. So the nonprofit organization will put together a written proposal and submit it to a foundation with hopes of achieving approval to receive funding from that foundation to the charitable nonprofit organization. So that's the process of grant writing. Development. Development is a term that's broader than just fundraising, and that encompasses fundraising and includes fundraising, but also involves a more comprehensive approach to the long-term growth of the organization or institution. So you'll sometimes have those terms used interchangeably, but development is a more popular term now and a little bit broader than basic fundraising. Institutional advancement takes a long-term and broad-based view toward building the future It also includes fundraising, development activities, communications, marketing, and constituent relations. So that's the broadest of the three terms. Institutional advancement would also include development and fundraising. So know the difference between those terms. We're moving on now to talk about motivations for giving. There's corporate philanthropy, and sometimes the line is a little fuzzy or blurred between marketing and philanthropy from a corporate perspective, especially these days. There's various forms of giving from a corporation to a nonprofit organization. There can be direct gifts of cash. There can be gifts in kind that we had mentioned on the other slide, like products, for example. Corporations can form their own foundation, so that a company can have its own sort of internal foundation of which contributions are given. Corporate nonprofit partnerships occur, and those are a way that corporations can be philanthropic. There's a term called enlightened self-interest, which may or may not have direct or immediate benefit, but the contributions contribute to the health of society. So enlightened self-interest is where a corporation may be making a contribution, understanding that there's no direct benefit to the company, but having a generally healthy society is critical to the for-profit business's success. And so that they call that enlightened self-interest. Strategic philanthropy is actually viewed as an investment. And that's the difference between a donation for the general good of society and self-interest. So it's strategic. Let me see if I can say that better. Strategic philanthropy is giving viewed as an investment, and it's evaluated on the return it produces. So that's a more calculated approach to philanthropy, is when it's strategic. So let's move on to talk about foundation giving. So we talked about private foundations, and we know what those are. So the foundations can be looked at as again, corporations can have internal foundations. Individuals or families can establish foundations. Independent foundations are also important, and so there are different kinds of foundations. And those foundations may have activities that reflect the interests of their founders. So they may be interested in funding those. The foundations also have a tax-exempt status, and they're required to give at least 5% of their assets, invested assets each year, in grants or in operating or to help with operating expenses. So that's important for you to understand the difference between corporate philanthropy and foundation giving. And under foundation giving, that there are different types of foundations. But the important thing for you to remember in this slide is that the foundations themselves are required to give at least 5% of the value of their invested assets each year for grants or toward operating expenses. Individual donors' motivations are often more complex and much less calculated than those of corporations or foundations. So there's altruistic reasons that people give money to nonprofit organizations, and those might be motivated by the individual's nature to help others and to improve the human condition, or they may have an egotistic motivation, and motivation by individuals' desire to obtain some benefit for themselves, for example, recognition, social position, or some kind of control. So this whole slide is about different motivations for giving. Corporations, foundations, and individuals all have different motivations. So we're going to talk now about the fundraising process for a while, and this is a graphic depiction of the fundraising process. First, determining the priorities and developing a case, then identifying and qualifying prospects that might give donations, then cultivating relationships with those prospects, then soliciting the gift, which is called the ask, and then acknowledging the gift and recognizing the donor, followed by the steward the gift and relationship with the donor, and that means the long-term relationship. And then you can see where the process continues. The arrow goes around to then cultivate relationships with the prospect, solicit the gift, acknowledge the gift, and then steward the gift. So that is an illustration of what the fundraising process for a nonprofit organization would look like. Because it's such an important topic, we're going to continue to talk about the fundraising process, and this will be a repeat of what I've just talked about in the